right, there we go. All right. So like I said, about 5 days ago, we called EU short. Green lines are the entry points that I was targeting for pending orders, of course. It was activated. Stop loss was all the way up here. Pull that down. Stop loss was right here, below, above this high, and above this monthly key level. All right. So what I want you all to see basically now is just how did price react around these key levels, and then these pink lines delineate market structure as far as where I need to see price either break or bounce from. Okay. So going back to the entry for the short, we see rejection from the monthly key level at another high point, right? So you could say that's a quote unquote double top. You got one tap, shifting momentum, 3 more pushes, 1 push, 2 push, 3 push towards that same high and towards that same key level that also failed, right? So now we've got the change in momentum. Now, as far as this momentum, guys, or the direction of EU, I had mentioned, I believe earlier, that this was just part of a bigger ABC correction, right? And what I mean by that is if we look on this daily chart, yeah, we've got the rejection from this monthly high, but notice, you know, overall the momentum has still been, you know, gradually up. Okay, we've got this break through a key level over here that hasn't been tested yet. Okay, so here's the clean break, right? From this low to this high is the clean break of this key level. So now this ABC correction, so now this ABC correction should come down to test this area as support, because over here it was rejection. Now that market's above it, it's going to act as a support or a floor. So from this wave up, we should see the ABC correction. And that's what I was referring to as we should see a larger ABC correction, because this is forming on the daily chart. And that's going to take a while to form. Okay. So just clicking down to the 4-hour chart, as we can see, it's a nice consolidation right here. Ooh. Hold on. I have a question. Yeah, it's about $1.20, Gina. Exactly. Definitely, I would say in between this range right here. All right. This is the zone where I'm looking for the ABC, the C correction to complete at. Not only that, from this candle over would be an order block, a bullish order block, or a demand zone, supply and demand zone, whatever you want to call it. Okay. Which is right around our key level, and that's, you know, 3 confluences which we want. All right. But in order for it to get through to this area, it's got to cross this high right here. It's got to break through this support. All right. So let me draw this out of what I expect to happen. Now, I'm not going to say it's going to play out exactly like this again. So we should see something like that play out. All right. Now, of course, how big or how deep C is depends on if price can break through this area right here. All right. Let's see. Let's delete that. Let's leave that on there. What I really want to focus in on and hone in on is, no, no. This area right here. Because what this is going to give you all is an insight look into this break right here, right? It gives you some more lesson or some more trading on the market structure, basically. Delete that. Now, with this being on the 4 hour, this is a really strong setup, okay? This is a really strong thing. So right off the bat, guys, right, we've got this pink line that delineates a market structure or an area of support or resistance, which if once price gets below it or above it, it's going to react in a way that it should generate a lot of pips, right? So we first have, let's delete this. I'm trying to open up. So we first have this break of this pink line, this market structure right here. Okay. That's a nice, strong, bearish move to hit this low, this next pink line, right? Here's the retracement from this high to this low. This retracement came right into the 786 at 86 level for the short, right? You even hit the 6 one, boom, for your short. This candle, and this candle right here. Those are called engulfing candles, all right? Those are the signals or the trades that you all want to begin to look for, all right? Those candles alone, engulfing candles, okay? The reason I say engulfing candles, because if you're trading with the trend and you see an engulfing candle, that increases the probability of this trade entry going in your favor, okay? So for instance, this engulfing candle engulfs these previous 3 candles, right? Notice where the momentum is going. If you see this heavy engulfing candle and you know that you're expecting to be bearish anyways, look into that trade. Be looking to enter that trade. All right. Look at this engulfing candle. This engulfing candle engulfed 1, 2, 3 candles, right? That's all bearish momentum. Here's the engulf, the break of structure, engulfing, break of structure. Here's the retest, right? Another engulfing that closed below that structure. So now it should be going down. But here's the thing, there's a timing element with this stuff, okay? So since we're expecting it to go bearish, right? What time period are we in? We're within the 7 to 11 time frame of a market changeover or recession overlap. So what should happen is what I expect is for the market to come, find some support right here, and pull back a little bit. So in between, like I would say now and 11:30 a.m. Eastern Standard Time, I would expect a little pullback that will come and test this structure point right here. Okay? Maybe even just a little bit higher. But through and through, we're still bearish. All the momentum says bearish. Everything says bearish. Any kind of bullish up tempo has been pretty much limited. All right. So again, I expect it to pop up, retrace, maybe even up to this area, and then continue falling. Now, upon the retrace, though, here's the structure point right here that we're looking to test, the bottom of. The breakthrough candle, hell, you can even say this might have been the retest, right? But I don't think that. I think it still will pop up and then go short. The reason why it will pop up is because now you've got a few different traders who's coming into effect. The London people, they caught their London session. Now we're in the United States area, okay? People are getting up for work. People are looking at the charts, trying to gather a bias as far as which direction they believe the market's going to go, right? So as a person who, is new in the industry, and one of the first informations that you all should have Googled or might have heard of is just always follow the trend, which is fine, right? But this is when session changeovers and things like that become so tricky, because even though you'll be following the trend, they'll still do a pullback on you. And if you over leverage your account, this pullback will knock out your whole account. All right. So you have to understand that, guys. Even though you're following the trend, you see it's bearish, don't just enter a bearish trade right now. You want to see the market pull back, hit a ceiling, and then enter, because that's going to, for one, give you the greatest chance for profitability. And two, it's going to control your drawdown. And three, if you happen to over leverage your account, it won't be as bad as catching that whole pullback and killing your account. All right. So that's just some, just words of encouragement right now. Now, let's pull this over just a little bit. If we were to draw the trend line, like I said, I usually draw 2 or 3 trend lines, right? Just depending on where the highs are, how the market's going, and things like that. Yeah. Now, when you're drawing trend lines or anything like that, guys, I always use the tip of the wicks. Some people will say use the bodies, but the true way to do it, guys, you have to use where price went to. Okay, price went down here for a reason. Right? It may not have closed down there, but indeed, price went down there for a reason. So that's why I use the wicks. Now, as you can see, right, here's our long-term wick right here. Here's our inner term or intraday. And then let's see. So we could have had an entry right here. We caught this short. This was what? Probably London. 9, 8, 7, 6, 5, 4, 3, 2. 2 a.m. Right? Let me explain this setup. So in between, I like to enter my London entries in between 11 and 2 a.m. Right? I usually set a pending order. So this is the 2 o'clock candle. One, you got 1, 12, 11, right? So if I see that price is rallying up towards this high that already had this change in direction, this is my setup area. So what I would do is flip from this high to this low. Let's zoom in a little bit. Let's go to the 15-minute for this one. All right. So if I see this shift in momentum that broke this low, I'm looking for the pullback to come and test this high, right? Not only that, if I went even from this high to this low, this is hitting right at either your 786 or 886. Right? So my pending order is right at this structured pink line, right? So the spread and things like that on the broker would have opened my order. Here's the setups you want to see. The trend, here's your pullback, right? This low hasn't been tested yet on this pullback. Here's the test to this low over here. This is where I say I would be almost expecting to get into for the buy for the pullback, but again, I'm following my moving average. I'm following in my higher time frames as well, just to make sure I'm following the correct trend, basically. There we go, Sheena. It's all gonna make sense, guys, as I continue to go over this stuff and things like that. But I always follow the higher trend. You see what I'm saying? So this is why I told you all earlier, you all were looking at the 1 hour time frame, which is fine, don't get me wrong, but this can potentially throw you off when compared to this. Okay, that's why I said the 4 hours typically your friend, because it's going to give you the trend for the majority of the day. Guys, there's only 6 candles that form in a day in a 24-hour period on the 4-hour chart. You know, they form at 9, what is it, 9:15, 9:15 a.m. and p.m. That's it. So another thing is, when you're entering the market, guys, depending on what kind of trade you're looking into, I always try to open the trade at the beginning of a new candle. All right. So like, I still expect this to be bearish, man, but yeah. All this bearish momentum, again, the MACD tells you the momentum, which direction you really want to be trading with. Yeah, I don't see anything just yet that would say, hey, go long. I'd have to see how price is reacting on the 15-minute chart again. And any kind of bullish movement, again, guys, it's just a retracement, a pullback. Notice right here, guys, right? Fractal high, fractal high, fractal high. Each of those fractals to the high have gotten lower and lower, right? Each of these ones to the bottom have stayed the same. So what this is, let me draw it for you. They call that a bearish pennant. Come on. So you're looking at something like this. All right, see this triangle? This is your pennant, flag, whatever you want to call it, your wedge. Here's your bearish move right here. Each of these highs have gotten lower and lower. Not only that, I want to show you all the engulfing patterns that I'll be talking about. You see at this fractal, this engulfing candle pattern, right? It engulfed this candle, also engulfed this candle, right? This is what you all want to see, the engulfing patterns. Look at this engulfing pattern off the trend line, right, with the fractal. This is what you all want to see. So once you see this, guys, you can enter after this candle, because your drawdown is hardly anything. And then you catch all this move. Here's another engulfing candle. You can enter after this candle, right? There's no drawdown hardly on that, right? So this is what I'm trying to tell you all. This is what we're looking for, engulfing candles. Now, don't get me wrong. You'll see it engulfing like this. You'll have a little drawdown, don't get me wrong. But look what happens. Look what you eventually catch. So if you see this engulfing, a pullback, and all this failure at the same high from that engulfing, re-enter, guys. There's another engulfing candle, a little drawdown, but re-enter. Let's see. And this one is still breaking this low right here. So depending on how this 15-minute candle closes, yeah, we're just going to see some more fallout. What pairs are you all looking at? Gold, GU, GJ. All right. Let's check out gold real quick. Ooh. No. No. Oh, shit. No one didn't pull up there. All right. So here's the thing with gold, guys. All right. Depending on what the value of the United States dollar is doing, gold's going to do the exact opposite. Well, not 100% exact opposite, but it's going to do the opposite. So what I'll do is I'll show you this real quick. All right, so here is, so here is the dollar index, right? It looks almost the exact opposite of gold. Correct. The dollar index is supposed to rise a little bit. I've got the dollar gaining a little strength, right? So if the dollar is gaining strength, that means gold is going to continue to fall. Now let's take a look at the daily chart. I always start from the daily chart. I've got gold dropping. Oh, shit. Yeah, gold's definitely going to drop. Now here's what to expect, okay? It's not just going to do a line drive drop all the way to this low. No. With this point right here, as you can see, all these engulfings, they keep making, you know, lower highs than this high, lower high than this high. Expect the pullback, but I expect once it hits around this area, you'll have another rally up towards this high before the major fall. So you'll be looking at something like that. All right. Now, depending on where A ends and shit, man. Depending on where A ends and things like that, like again, there's our most recent structure or history points right here. So that would be my first educated guess at where it would find support at. And again, if you're not in gold, again, I would wait for the pullback to happen. There's always a pullback, guys. All right. Somewhere, shape, or form, there's always a pullback. So just wait for the pullback to happen, whether it's on a 5-minute chart, a 15-minute chart, 30-minute chart. Just wait for that pullback to happen. But honestly, with it being a session change, let me show you something real quick. If a pullback happens on the 15-minute, you're looking at this whole area right here for your entry, extending all the way up to here. But Coco, what are you doing? But yeah, I definitely still bearish on gold. I mean, there's no indication of any kind of bulls yet, so we're still bearish. All momentum is still heading down. Right, Sheena. Let's see. $13.24. Let me see where I would expect it to find some kind of. I don't like that setup at all. Well, honestly, let's say it finds support right here, right? And your next entry should be in between this zone with your stop loss going up here. Yo, what happened? Watch out, Coco. Let's see. For an even safer entry, let's use this whole move, because then you'll find you'll give yourself better chance, right? So depending on pretty much how you're looking at this, let's go to the 4 hour. All right, so the reason I wouldn't use necessarily this high, let me delete this, is because as you all can see, upon this pullback right here, it already created a lower high than this high. And then these two candles, let me drag this over. So here's your market structure. This green line, let's say that delineates market structure, right? You got test to it right here, bounced up. These two candles broke through this market structure. So upon this pullback, you got this lower high right here. So I would go from this high, well, I can't necessarily go from this high to this low yet because it's not formed inside correction just yet. You see what I mean? On the 4 hour, that is. But if I drop down to the 1 hour, I'm still not able to use that as from this high to this low as my fib point or my anchor for my fib because there's no inside return yet. It has to really make its low point like this and have an inside return, or I can't really use it. Something like this, still, I wouldn't even use, even though that was probably a 382 retracement. Let's see if we went from this high to this low. Yeah, almost a 382 retracement. But you see this high point right here, and then exactly where this found resistance at before the next push down. This is just all stuff you want to see and eventually want to train your eyes for, because you've got this engulfing candle that engulfed this candle. Here's the move down, right? Here's just the retrace. The retrace. 1, 2, third, and we got out of there. The number 3, guys, is typically a good rule of thumb to have. There's always 3 pushes to a support zone or to a support level. There's always, and what I mean by that is 3 pushes is like the swing points. If you notice, right? 1 push, 2 push, 3 push towards the same area that didn't break, right? Before it got up out of there. Notice right here. 1 push, 2 push, 3 push to that same area before it got out of there, right? Here's again. 1 push, 2 push. This single candle could be the 3rd push up that never passed those highs, so it's getting out of there. We can do this all day. 1 push to the low, 2nd push to the low, 3rd push to the low. That's a whole swing point within itself, all right? And if we go, this is pretty much what I'm showing you is swing points on a bigger degree. 1 push, or 1 push, 2 push, 3 push, gets out of there. 1 push, 2 push is your 3rd push, and it's getting out of there. 1 push, 2 push, 3rd push, it gets out of there. Right? So a general rule of thumb is, guys, whenever you see 3 pushes towards the same support resistance or at the same level, and on that 3rd push it's not crossing, or even on the 2nd push it hasn't crossed and closed above, guys, get into trading. Because more times than not, it's going to go in your favor, even with little to no drawdown. All right, it happens all the time. Let's see. How far back can we go and count the 3 pushes? Let's see. 1 push up, 2 push up, another push up, fails. Here's another way to look at it, right? Even within your trends, you've got 3 pushes, right? Remember me drawing Elliott Wave? This might help you all out a little bit too. 1 push, 2 push, 3 push before the ABC correction, right? That's why I'm telling you guys, the general rule of thumb, 3 pushes towards a direction, guys, there's typically a pullback or retracement. Now, again, that's not 100% all the time, but more times than not, as you all see, we've scrolled back. 1 push, 2 push, 3 push. Even on this, you got one push up, retrace, two push up, retrace, your third push, right? Before the drop. Let's see. Yeah, I still got this pretty bearish, man, honestly. Let's look at the other ones. All right. Oh, are you getting out before pullback and then re-entering? Alex, that's a good question. So here's the thing, guys. So let's say I caught this move, right? Or let's say I caught this move down. If all this is a retrace, and I know that, depending on my account size and what my trade goals are, I'm either going to leave my trade in or I'm going to take profit. Now, that's just a personal preference, okay? If I'm swing trading and I have a target of this low on this pullback, I'm still leaving this original order in, but I'm going to look to re-enter over here. Okay. Now, again, this comes with experience. It comes with time. It comes with, just you understanding what you're doing on the charts and what you're actually looking for. But yeah, again, that's a personal preference. You can catch this, close it, let this retracement happen, let it create a lower high than this, re-enter, catch that trend. That's the safe way to go as new traders. Okay. And that's what I would recommend as a new trader. Catch your move, take profit, let the retrace happen, re-enter, catch the second move. That's a good question. Let's see. Yep, that's good stuff right there. Then you all said GU and GJ, I believe. Yep. All right, cool. Dang, entries on board. All right. Okay, let's see. Starting from the daily chart, right? We see almost something similar like EU, but what I'm expecting, or what I want to happen, is whoa, why did that put right there? Yeah, Fed speech today. What time is that, Sheena? Oh, guys, I didn't tell. This is another thing. So heavy news on the U.S. dollar at 10:30. That's the first thing that popped up. This news right here at 5:20. I don't really expect much to happen. The Fed already spoke at 8:30. Didn't much happen. So this is what all of the New York session is waiting on, the crude oil inventories, which is huge. This is going to affect gas prices and everything, guys. So depending on which way this goes, you're either going to see a spike in gas prices or you're going to see gas prices go down. What else do we got for today? Dang, NGD. I'm going to check that out today too. What's his mask looking like, man? Where did I put that? U Chef. All right. Yeah, I'll check out GU, GJ, and U Chef. I'll check those out. So here's what we're looking at on GU, right? ultimately, guys, we still have a lot of bullish momentum, right? So any kind of pullback is just a retracement, right? Same thing with EU. Now, how deep that retracement is going to go, we don't know just yet. We don't know at all. But what I'm looking at right now is, first off, the rejection off this monthly key level with this engulfing. Here's the change in momentum. This engulfing changes momentum, guys, right? So now that we've changed momentum, we've hit a market structure point, which would be a floor or a support, okay? So what I'm looking for is maybe just a little bounce up, hit this area, and then some more failure, basically, into the top of this weekly level, basically. Same thing what I'm looking for EU, but just not as big of a move. Again, fractal towards the high, engulfing candle engulfs these previous 3 candles. So now we're looking for this pullback up to fill this high, and then that would be our entry for the low. For the short. Let's see. Let's go to the 1 hour, see what's going on. Okay. Now, remember me telling you all about the pullback at the beginning of the session, right? That short entry isn't going to come until probably about 11 or so, depending on what the market does at 10:30, right? So at 10:30, looking at this setup right here, guys, we're going to have this pullback pop up and test, I would say, I'll go from this high to this low. Or, yeah, let's do like that. Okay. All right. So, depending on what this move does at 10:30, guys, is going to determine where we get in for our shorts, right? Looking at this formation right here, this is our buy situation or our buy model. But again, we're looking for the short because we're following the longer time frames, right? And like I said, to get in short, you want to enter in on the pullbacks, right? Let's see. So this pullback actually, I mean, it probably won't even make it this high. Just looking at all this market structure right here. Again, it just depends on the news. But I am short, but my short's probably not going to come until this area. Another thing is while I'm waiting for this pullback to happen, I know it's going to pop up, is because divergence itself on the chart, on my MACD, right? I haven't went over this with you guys yet, but it's something that's going to be coming. Let's see. All right. So let me explain this. On the MACD, right, we've got this low, and then if this creates the low, right? Hold on real quick. sorry about that. I had a text message. All right. Yeah, okay, so on this low, and this low, if it's going to create a true low, notice that this low is higher, this low is higher than this low, and this low is higher than this low. Something as you would see is in an uptrend, correct? Right. Now, if this is going to be true divergence, this low is this low. This lowest low on this price chart is higher on the MACD. The MACD is showing you momentum, convergence, divergence, right? This is also a buy signal itself, okay? So let me show you all what we have. Even though I think this buy signal might fail. The reason why I say it might fail is because this rally up didn't cross this. But notice though, right? You've got the change of momentum, engulfing candle, pull back, find support, push down towards this low. So depending on what this does, this next push down does to test this low and this low, if it finds support, guys, get in your long and ride it back up to up here, because that's still a lot of pips on a retrace, right? This will be your A, B, C correction from this wave. Let me draw this out for you.
Hey, Wallis.
What's up?
When you talk about those 3 pushbacks, does it necessarily have to reach the line, or is it just the wick showed that it tried to push that way?
The wicks. I go off of wicks. Now, notice, so here's 3 pushes right here. Here's a push to the low, here's a push to the low, here's a push to the low, right?
Mm-hmm.
On that last push, you want that last push to be lower or higher, depending on which direction it is, than that second push. It's like you're looking at a swing point, okay? So for instance, let me find a good one. All right. So 1, 2, and then 3. Or you can do 1, 2, 3. The first 3, doesn't matter. You can use these 3. This third push is lower than this one, right? This push is lower than this push, right? That's what you want to see on those pushes. Now, that's all those pushes are, guys, are just like swing points being created. Okay. This whole thing is a failed swing point, right? 1 push, 2 push. Even on this third push, it didn't cross this wick. It barely crossed the body of the candle. That's okay. Then you've got this breakthrough or this breakout that broke this low. So that's something that you want to see. Just keep in mind on that third push, typically you want to see it either higher or lower than the middle push, depending on which direction you're going. Let's see. I'm gonna just do this whole thing up for you. So that way you can all see what I'm seeing. All right. So here's Elliott Wave in the bearish situation, right? And this is why I feel like this C wave could come all the way up into this wave 1, met with this extension level before we enter bearish again. Does that help you all out a little bit now that I've drawn it on there? And after this C completes, we'll have some more bearish action.
So are we looking to catch B to C?
You all can catch B to C, but my only concern with that is we don't necessarily know how deep C is going to go just yet. We won't know until this pullback comes up, honestly. And how this pullback forms is going to determine whether or not this C is going to come up here. Because like I said, if it can't get above, hold on real quick. If it can't get through this area right here, then we've got this price coming up to test the bottom of this and then falling some more. So this is why you have to wait for the market to show its move. You see what I'm saying? But yeah, you can certainly catch this if you wanted to.
But the main goal is to catch, sell at C.
You're correct. As new traders, follow the main trend. Because in the pullbacks, or following the trading with the pullbacks, is where a lot of folks get into trouble. Because one of the characteristics of the C wave and the pullback is to actually induce traders to go the complete opposite direction. So this wave C is going to be like a nice bullish move. You see what I'm saying? And it's going to give back a lot of the trend that was gained from these 5 impulse moves. That's how the C wave works in Elliott wave. So like I said, yeah, you all can catch this if you want to, but like I said, just be careful with it. Catch you 20, 30 pips and be done. Don't hold it like a swing or anything like that. Just know that you're ultimately looking for some more bearishness. See what I'm saying? So like scalp it if you want to, or something of the sort. But cool. All right, so I'm gonna leave these charts marked up too. I like leaving them marked up so that way I can show you all updates and things like that of what happened and how it played out. But yeah, this was a nice buy model, but it's just a C wave that's going to be completed. Let's look at GJ. Somebody had a question on GJ. GJ's perfect. I would have gotten a buy on GJ had I seen this one. But look though, y'all see where these green lines are? On this buy, I would say be careful because it's going to find resistance along these green lines before going short, possibly. Now, I'm kind of speaking prematurely because I haven't seen the daily chart. Yeah, so I'm not really speaking too prematurely because I kind of just knew. So here, even on the 4-hour, guys, right? 3 pushes to the low. So now we're going to have in the ABC correction form, right? Now on this correction, even if we go from right here to this, it could form a deep correction, right? And come all the way up here. But in order for it to do that, it's got a lot of market structure that it's got to get through. And what I mean by market structure is, a lot of price area as far as long the lines in this zone right there that it's got to get into. Let's see. But this was indeed another buy model because you've got 1 push, 2nd push, right? Change momentum. Here's your engulfing that came up. The retest of this engulfing trend. Now you're looking to shoot off. Let's see. Now, depending again where this is going to go, we don't really know just yet. More times than not, like I said, we like to see the deep retracements. But again, it's got these 2 green lines are showing you market structure that it's got to break through along with these green lines. Now, here's the thing. For your short entry, right, you already got 1 fractal, 2 fractal. You want this 3rd fractal to be lower than this middle fractal. And this is what I was talking about, your swing points as a whole, right? So if you fib from this swing point, to the bottom of this wick right here, my entries for this alone is, right around these green lines or the swing area or market structure, I'm sorry. But again, that's just my thoughts of it. It's got to get through this structure point and then this structure point before it has the deeper retracements. So let's see. Now, honestly, I like this area for your entry due to the simple fact that this candle right here already engulfed these two candles, and then this candle pulled back and broke through this bottom structure that price was already above. So if this does pull back, look forward to find resistance right along these two lines for your entry, I would say, for your next short. But again, it could come deeper. I'm not 100% accurate on these trades or anything like that. Nobody is. More times than not.
Hey, Wallis.
What's going on?
When you say when you set your previous order, your pending orders up, if it doesn't actually reach that spot for your trade to activate, do you still get in if it didn't reach that initial spot, but it's still going to be bearish or bullish? Either way you're going. You still get it.
You just do a manual entry.
Okay. All right.
Yep, just do a manual entry. But definitely, guys, you all should have a trade in by, I would say, 11:30 at the latest. Because anything after 11, guys, it's a wrap. It's just going to be trending in that same direction or consolidating. And then after typically about 1, 2 o'clock in the afternoon, trading volume dies down. Well, dang. See what DJ is doing. I want to see it pop up, find some resistance around this area, then get involved. Hold on real quick, guys. What'd you say look at, Alex? Is it you, Chef?
That wasn't me.
Oh. All right, so ultimately, you Chef is still bullish, right? This was, let me go to the 4-hour. Like I said, I've been long you Chef since last week. We had one entry up here with our stop loss right here that got stopped out, but then we had a second entry at this green line, which was a pending order that's well in profit, right? So, but here's what I would like to see. All right, I would like to see one strong push down. All right, so let me see if I can draw this out for you guys. All right, so we've got this point over here, right? This point right here. I want to see one more push into this zone. One strong push, okay? Because like I said, ultimately we're still bullish on the dollar gaining strength, right? Let me help. Look at the day chart. Uh-oh. Delete. You've got some tweezer bottoms, bullet bearish. Oh man, let's close that out. Tweezer bottoms right here. This single candle was a bearish move towards that low that pulled back. Then you got this engulfing. Now this candle is pretty much shooting the hell up out of there. So like I said, I'm still ultimately bullish on the dollar. But as far as like the 4 hour and the 1 hour is concerned, I would like to see, because here you've got 1 drive, 2 drive, 3 drive. Here's a 4th drive that should really, you know, fail in my eyes, or from my understanding, my experience, should really fail and then start a nice little retrace. Not necessarily over here, but somewhere along this zone right here. So if we fib from this low to that high, I'm looking for the order block entry now, basically, right? So upon the retrace, I mean, honestly, hold on. Let me get back to normal. Zoom out. So yeah, on this retrace, like I said, I want to see it enter that zone, and we'll see a bigger spike up. Remember, wave 1, guys, is really the most confusing wave of Elliott, because it typically still has your bearish moves in it, right? But it's going to drift in the direction that you want it to go. So what I want to see, like I said, is the ABC correction slam down into the zone, which is going to give us the buy setup, the buy opportunity to catch it all back. That's what I'm looking for. Let's delete this real quick. But my thing is even with these pullbacks you got, it's above this high already. So depending on how this candle closes, and then what the 1030 news does, like we could just see it, you know, slight pullback right here, and then it pop all the way up. Again, kind of got to just let the market show its hand and enter.
So you're swinging from the low to the high to look for a buy, right?
Yeah, swing, anchor your, on the fib, guys, if you're looking for the buy opportunity, anchor from the low, and then your second anchor point is the high. Because remember, these percentages, they're measuring the bearish move, okay, against this bullish move.
I've been confusing myself on the fibs, because like
I can probably help you out on that. Have you been using MetaTrader? MetaTrader does it backwards, I believe.
Yeah, like on my phone, it automatically does it the way I need it. Like I've been having to, on my trading view, having to go in and hit reverse.
Yeah,
you know what I'm saying?
That's because MetaTrader does it backwards. When I first started trading, I was getting that stuff confused as well, just because I was trying to use NinjaTrader and MetaTrader, and they did their fibs completely opposite. So.
Yeah, because I've been like, I'm trying to figure out, was I doing it right? And then I've been, I don't know, man. I blew it. Go in the room, boy. I've been I like what blew an account, like thinking it was gonna I'm thinking it's gonna retrace to go the other way. Cause like I'm seeing, that's my question. Like, why do you have this zone for it to push down here if we're looking for it to go, are we looking for it to come all the way down here in retracement, then go up, or what?
Okay. The reason why my entry zone's right here, all right, is because that's where my retracement levels for my entries at when I swing from low to high. I mean, honestly, I can't really use that high just yet because it's still creating that high. I've got to see the bearish move like this over here. But so if I use that first high, you know, in between the 618 and the 886 is that zone.
So you're basically saying it'll retrace all the way back down to there.
I'm not saying for 100% it will. I'm saying that's where my entries are. So if I do see price retrace down into that zone, yeah, I'm looking for my entry. If it doesn't, let's say if it retraces down and it finds support along the 382 or the 50, I'm looking now at the previous market structure, and then I'm reading the price action of the moves that's happening. Because if you all look from the 382 itself, here's the push to the low, and then the change, right? And then all this drift never crossed that low, so it bought. It shot back up. Now, I could use that old history point once this creates its high, wherever it's going to create its high. Let's see where it potentially could create its high, right? I'm just going to guess, guys. Don't get me wrong. So let's say it created its high at the 618, right? Then that zone's in a completely different area. It's now up here with, you see what I'm saying? Because we're looking for the buy situation anyways. But as a swing trader, I'm used to using the whole trending move.
Okay.
Because even though this is an impulse, guys, guess what always happens with one impulse move? There's always a bigger ABC correction. So that's why I went from this low to this high. I let the bigger wave happen because that's going to give me the biggest chance of probability.
Okay. So do you go ahead and take that retracement as a trade?
As far as what?
Would you take that bearish retracement for, would you make that an entry until it gets to your buy position?
Would I enter off of it right now?
Yeah, like for when you see it getting ready to retrace, would you catch those pips in the retrace?
That's actually a great question. And I'm going to say, as new traders, no.
Okay, because that's why I've been killing myself.
Exactly. Exactly. And that's why I said no. Trading against the trend, guys, it takes a little bit more experience and understanding the market psychology and Elliott Wave and things like that. I'm not saying you all can't, but like Alex said, more times than not, you'll end up killing your account because you're not going to know where that retracement is going to end. Also, if you're not notating what you're entering, how you're entering, and things like that, when you forget that trade and go back to look at it, guess what? You're thinking that the market is in a true bullish or bearish move, and it's not. It's just a retracement that you forgot about. So then when it goes up, you're like, oh, it's just a retracement. You're looking for another short. No, it's going to continue to go, and that's what happens. And that's why I kind of tell you all, start jotting down your trades you take and keeping notes on the trades you take because it's going to help you all in the long run.
Yeah, I did that yesterday, man, and got killed on GJ.
Oh yeah, man. I didn't trade too much yesterday. But man, I've been waiting for this U chef and the EU trades, man. I've been waiting for them since last week. I was a week early. I knew it was gonna pop up. I was just a week early. That's crazy. So it's almost 10 o'clock, right? That news comes out at what, 10:30? All right. So again, here's what we're looking at. On the 15-minute chart, I can use swing from this low to this high. And that's the zone, right? This is that entry zone. Actually, let me correct that. Boom. So upon the correction of this wave or this move right here, the ABC correction, it's either going to find support either at the 382, the 50, the 618, 76, or the 886. If it gets below this 886, you're looking at the entry zone down here. You see how that works? So here's the first entry zone. If it fails, here's the second entry zone. But I'm not going to do both entry zones. When price gets into this zone is when you reevaluate the price action of the swing points that are being created with previous structure. Same thing down here. If price breaks below this, guys, it'll pull back and test the bottom of this and then keep going into this area. So, I'm trying to look.
Hey, so you mean what you're saying right there is like, even though you're placing an area for a buy, if it breaks structure and breaks again, then it's just going the opposite direction in a downtrend to be looking for that, or?
I wouldn't say you actually be looking for the downtrend. No, you're just in a bigger ABC correction.
Okay.
Because you got to remember, ultimately, guys, ultimately I'm bearish. I mean bullish on the dollar, and a much bigger ABC correction. You see what I'm saying?
Okay.
Uh-oh, wrong tool. Hold on.
What's the difference in ABC and 1, 2, 3? I mean, if they're doing like that type of thing.
ABCs, those are your retracements. One through 5, that's your actual trend.
Oh. Okay, gotcha. Okay, so like on the big scale, you use the 1, 2, 3s, and then.
Correct, because I mean, from this high, impulse down, retracement, impulse down, retracement, impulse down,
Okay.
and then ABC is a correction. Now this is a training I went over. This is the Elliott Wave training, Alex. So
Right.
each of these waves, they've got their own characteristics, right? I told you all, wave 1 is typically indecisive. It's typically just, it looks like it's just drifting.
Right.
Okay. Wave 2, the retracement wave 2 is typically a steep one.
Mm-hmm.
Okay. Wave 3 is more of the bigger wave of the 1, 3, and 5. It typically trends the most. Wave 2. Now, notice on this wave 2 was kind of a diagonal or kind of a steep retracement against wave 1. Wave 4 should do more of a zigzag. Not to say that it won't reach, can't drift up a little bit, but it should be more of a zigzag before the next wave 5.
It's the correction period, right? Kind of like correction before it gets to
Right.
4.
Exactly. Let's delete that. So that's what I'm looking for.
Okay, so how does that ABC, conspire with that? What do you mean correction?
Okay, the correction is a retracement or a pullback. Let me show you. All right. Get that off of there. So, yeah, I'll just use this. So from this low to this high is an ABC correction, right? It's a small one. You've got A, B, C. That ABC correction is wave 2 in the 5-wave impulse.
Uh-huh.
And that's how you count it.
Oh, okay.
So even within, let's say from wave 2 to 3, you still have an extended wave or a 5-wave impulse within it. This is what I meant by cycles within cycles, right?
Okay, gotcha.
So you've got, let me see.
I see now. So that basically that's inside the bigger trend ABC, the 5-wave inside.
Correct. Now, once you all become proficient at, labeling, like the cycles, guys, like they go all the way down to like lowercase i's and stuff like that, right? They go like there's like, it goes from like grand super cycle down to like the minute cycle. We only focus on like 3 or 4 of the cycles. So like I'm not actually teaching you all the full Elliott wave. That will take forever. All right, I can give you all the book on it and some more videos and stuff like that for you all to learn deeper into it. But for now, what I find the basics, just getting the basics and down enough, will do you all some justice.
Gotcha.
See what I'm saying? So 1
Maybe.
through 5 ABC is all you're really pretty much going to be using. But that's pretty much Elliott Wave. Let's clean this up a little bit. This did shoot up a little bit already, didn't it? Is that right? Let's see. All right, so another thing I like to do is use the extensions. So let's say you see this retracement, right? That's completed. The 127 and then the 1618 are your extension levels. And what I mean by extension levels is they're the extension or one-to-one move from this to here, basically, okay? So from this low to this high, you should see, or this impulse move, I'm sorry, this impulse move should finish or complete either at the 1272 or the 1618. All right. And so when you fib from this high to this low, or when you fib the retracement, that's what these extension levels are giving you. The prediction or a nice mathematical probability of where that swing point should be created at. Mm-hmm. Y'all got any other questions? I'm ready for this news release to get released, though. A lot of the market won't move until then. I'm glad I checked that out, too. Because now I'll go back and relook at the EU entry. Because that has a little bit to do with it. What's up?
Once you check that news, say like a big engulfing candle comes out, you don't get in the middle of that candle shooting. You wait till the next candle always?
Yeah, wait till the next candle or wait for the pullback of that candle.
Okay.
Also, though, it's got to be in the direction that you've already predetermined you were going to trade with anyways.
Okay.
Because some news candles, don't get me wrong, like they can be big ass heavy news candles. For instance, I think it's NFP. Depending on what chart you're looking at, NFP will heavily move in the opposite direction first and then go the other way.
Okay.
So if you enter, let's say if you enter on this move on NFP, I mean, that's fine, but you just want to scalp that because boom, you're just going to shoot the other way. And
Okay.
that's typical with NFP, I believe. But here's the thing, guys. Those news releases for Forex, like they almost, I'm not going to say they don't completely matter. Here's the thing. Forex price charts, guys, like Forex is like 100% purely price action and technicals. Those news releases and economic reports, those are for like the stocks people and things like that, for futures and shit like that. But what you'll find is most people, once you get your technicals on point, yo, it don't matter if you're using news or not. Like my brother, like he doesn't even look at the news sites. Like I used to look at the news sites a lot, don't get me wrong, because I like to trade with the news. But once your technicals are on point, man, it's pretty much a go time. Let's see. What do we want the news to say on this trade? That's a good question. Basically, for the USD chef, you want the news to be good. So we're dealing with the crude oil inventories. We want the crude oil inventories to be great. To have like, let's say, how do I explain this to you? Let's say if they're doing inventory, let's say they're looking at 100 barrels of oil, right? Let's say they inventoried 100 barrels of oil, but the actual news report only accounted for, let's say, 75 of those 100 barrels, right? That's going to be bad for the United States dollar, and you should see it drop, right? That would cause prices to go up, gas prices to go up, because there's a shortage of inventory. See what I'm saying? Now, let's say if there's 100 barrels accounted for, and then they got 125 in inventory. That's actually good. You should see gas prices go down and the dollar go up. Cool. Now as far as this trade, like I said, guys, 10:30 is when the news should be coming out. Depending on what that says, like you'll have it shoot one way or the other. But ultimately, I'm still bullish on the dollar, even though this would be a retracement to this area and then pop back up, I'd say.
Is that 10:30 Eastern or Central?
Eastern, I'm sorry.
Okay, thank you.
So here in like 25 minutes is when that news should be released. Now here's the thing. Let's say the news gets released, right? And you see it push down and it doesn't cross this low, and you see it find support along this area at the 50 or even at the 618, yo, get in, because it might not even reach this zone. Because what I'm trying to show you guys is already here's your order block, your supply zone, right? Which is already met in with your fibs from earlier. So you've got the change in direction, broke this old high right here, retracement down to this low, got the hell out of there. That broke this high now, right? Broke this high, the retest to this high happened right over here. So now you see it drifting up a little bit. Now here's the break of this high right here. So now you see it drifting up. Price has to get below this point and below this point and below this point to honestly be a bearish market. That's why I'm ultimately still long on it, even though we might see a little retracement. That's just all part of the market cycle. So let's see, y'all got any other pairs y'all want me to look at? Let's see.
Hey, one more time for me, Wallis. So if the dollar index is going up, then if the USD is on the right side of the pair, that means you want to go for a short, right?
Right.
And so, but basically, if the USD, say the USD, the dollar index is going up, but say it's USD JPY, do I look for a sell if USD is front, or do I look for a buy?
You're looking for the buy. So here's the thing with the currency quotes, guys. For instance, the Euro USD, this is the Euro versus the United States dollar. So if the United States dollar is gaining strength, the Euro is going to lose, right? Now, let's say we go to USD JPY. Let's say this is the United States dollar versus the Japanese yen now. Now, if the dollar is gaining strength, then you should see that the dollar gain strength on this chart as well.
Okay.
You know what I'm saying? Now, it's not going to be 100% correlation with the dollar index and the currency pairs. No, it doesn't necessarily work like that because, again, you have other things that you have to take into account. For instance, the Japan's economy and stuff like that. So now it becomes a timing thing. You see what I'm saying? You just have to wait patiently for it to show its move. But I will tell you all this right now. From this impulse up, this is wave one. Here's your A, B. Remember that C wave should be pretty steep to induce traders to go short, which will find support. This is on a 15-minute chart too. I like this setup. All right. Entry zone from this swing low to this swing high. Our entries are at the 618. Now, this could be the retracement right here. Let me show you all. You got the A, then you got the sideways movement right here, and then you got the nice strong C move down, right? And then after that C move down, you've got that change of momentum, which change of momentum, A, sideways movement, have a nice C push down. We could then fib from this low to this high and get another entry zone. Oops. I typically like to see the lowest point tested, but again, here's your swing that already had some bullish momentum shown that broke this high. So now you've got it either going to find some support at this 50, this 60, or the 786. And what I'm looking for, guys, is with these zones, I'm just looking at market structure to the left. See what happened previously at the left, right? Price doesn't get at these points. If price doesn't break through them, then you know it's finding support. Like it looks to be finding support right here, right? What chart is that on? Did we fib? I guess the daily. Yeah. Lead and this is what I want to see. So actually, let's see. So you all see this pin bar right here? Let me delete these real quick. Price pin bar off your entry already and got out of there, right? So here's another retest that is still above that market structure, this green line. That's something we want to see, because even if you feel from this low to this high, you know, guess what? Price still hit your entries. This one hit the 618. You're still averaging higher lows, basically. So again, this news push, like I said, might push down and then pull back up, but that's what I expect. I'm still bullish on the dollar, basically. That's just me. And again, I could be wrong. If I'm wrong, I've got stop loss and a nice risk management, but ultimately still bullish on the dollar. All right, let's check out GCAD. Let's see what GCAD is doing. GCAD should be falling for the retracement of this level, right? Now, depending on where the C completes at, you could have like a flat. This would be wave one. Wave two would be more of the sideways consolidation and then pop up. So again, we just gotta wait for the C to complete, to look like it's completing and things like that. But already you have this low, which is higher than this low, and this low, which is also higher than this low, but at the same point. So depending on what it does over here, if it creates another swing point low, then yeah, here'll be your entry to go along. But I want to see it continue down a little bit deeper into our zones, into our fibs. All the way down, at least to the 618. You know what I mean?
Is that the 4-hour chart you want in?
What'd you say?
I said, is that the 4-hour chart you want?
Yeah, that's the 4-hour chart.
I'm on my cell phone. I can barely see.
Ah, okay. But no, yeah, that's the 4-hour chart. That's what I'm looking at. I think next week, guys, is when I'm going to start back up the training classes. We're going to pretty much polish up on a few things. I'm going to help you all create your trade plan and basically your rules or your list of confluence that you personally will be basically entering off of. It's important for you guys to have that stuff, because if not, you don't really have a plan that you're sticking to. You got to have a trade plan, guys, to really succeed in this market, okay? So what we're going to have is we're going to start out with, I'm going to recommend 3 to 5 pairs, all right? No more than 3 to 5 pairs, okay? These are the pairs that you're just basically going to mark up. These are the pairs that you're basically going to trade off of and just keep it at that. Any trades outside of those 5 pairs, I wouldn't recommend unless it's like a swipe trade. Everything else is irrelevant. All right. I don't care who's trading who's trading what, none of that. But This is for your all's benefit and to help you all basically learn a little bit quicker and to basically help you all master some stuff. Okay. Because what you'll find out is once you know mark up your favorite 3 to 5 pairs, guys, you'll become hip to its rhythm. You'll be able to become hip to its cycle. You'll be able to understand the psychology behind that single pair because you've traded it so long, you've studied it so long, you've marked it up so long, you just understand what it should be doing. This is the level that you all want to be on. All right. So I understand that right now you're just out here trading and things like that, which is cool. It's fun, all that good stuff. But you all want to have a long career in trading, and for your best chance of succeeding at this, guys, stick to 3 to 5 pairs. Create your list of confluence, and what I mean by list of confluence, I mean is like your trend line breaks, your engulfing candles, your fib levels, your key levels. It's price at each of these things, or is price breaking the trend line? Is it bouncing off a trend line? Is that a market structure point or a support resistance? Things like that. The more confluence you can add on a setup, for instance, the trend line break met with a moving average crossover, met with an engulfing candle, met with the 786 confluence, guys. That's a whole list of confluence that basically says, yo, you're good to take this trade, right? Not only that, we're going to be getting into the risk management and showing you all basically how to calculate it. I went over it briefly in the training, but like I said, we're just going to polish up on a few things coming up in the next few weeks. No doubt, no doubt. Let's see. So, hell yeah. That's my other dude, Alex. That's right. All right. So, what did we look at this morning? GBP, JPY. Yeah, we looked at GJ. We said we want to see it retrace a little bit before entering short. We looked at EU. I said I ultimately still have it short. The dollar is still long. Want to see this pullback just a little bit. We won't know until after the news, honestly, guys. I wouldn't even enter a trade until after the news, if you aren't already in one. What else did we look at? Did we look at UCAD? No, we didn't. Jeez Louise, man. We looked at UCHEF. I said I had it bullish still a little bit. Wanted to see a pullback. We may or may not see a pullback, guys. I'm just letting you know. And GU. That's what we're looking at. So again, for the most part, guys, I'd say we're waiting for pullbacks to happen or for pullbacks to complete before continuing the prior trend. But I'll keep these marked up, and then after news, I'll send some alerts or some updates in the chat to see if I believe the market's still going to play out in our favor. But other than that, guys, that's pretty much it. Y'all have any questions? Uh-oh.
Hey, listen, on that Euro, Euro USD, right?
Right.
I was just looking at the day chart, right?
Mm-hmm.
So it's not safe to say that's in the third wave to the fourth wave on the Elliott wave.
On the day chart?
Yeah, day chart. On the day.
Hold on real quick.
Let me see that.
Right. Let me share my screen one more time. Yeah, Tamika. I'll send the links out for you.
Can you see that?
All right. So as far as the Elliott wave, what you're looking at is from this low up to this high, right?
Right.
All right. Let me mark it up for you. See if I get what you're getting. So from this low to that would be wave 1, inside retracement, right? But remember the characteristic of wave 2? Typically, wave 2 or 3 are your extended wave, right?
Right.
So notice that the wave 2 was more of a, I would say, flat style correction. So I'm counting on wave 4, the retracement wave, to be a little bit steeper.
Right.
And then for wave 5 to, let me get this. Wave 5 basically completes somewhere up here. Depending on where this wave 4 completes at, right? And then after that is when you'll have the bigger ABC correction. There we go. And so what happens is, I'll show you all the guidelines, right? Wave 2 looks to be more of a flat style correction. Wave 4 should be a little bit steeper, right? And then you've got ABC correction. The C should actually, I would say, find support right around this weekly level. This isn't a weekly level. This is a monthly. Sorry. So this is basically what we're looking to see. Let's say something like that.
So we're looking at EU to come down.
Correct.
Price line.
And then what I'm actually, that's where that freaking was. I knew it had something, dude. This is what I was looking for, the ghost feed and stuff like that. But where is it at? Y'all see how that works? So along with this ABC correction stuff, you'll have, technical chart patterns like head and shoulders, all kind of things. Y'all see how all this coincides with like adding confluence? So let's say if this actually does play out, shoulder, head, shoulder, that's a bearish pattern, right? You can enter off this B completion, catch the C wave down. Like it's just a lot too that you'll add into it. Once you all become used to using like Elliott Wave and looking at the chart patterns and just understanding the market, just generally, just like even a fraction of this stuff, guys, will help you all tremendously. Because again, you'll be able to just make art on your charts and, just see how the chart plays out with your art pretty much. But we can see something like this. More times than not, this is something that really plays out.
I think we was like EU might be breaking that price line right now.
Shoot, probably. I wouldn't doubt it.
Yeah, I'm looking at it right now.
Yeah, still heavy bearish movement. News is coming out here in 7 minutes, so we'll see what it does. That's crazy, man. But yeah, all that is just confluence, guys. So let's get that up there. Yeah, but I still got EU bearish. What I wanted to see was a smaller head and shoulder pattern. Like I wanted to see shoulder, head. I guess you can call this neckline, and then like another shoulder that was lower before it came down. But like I said, it might still create this right shoulder. It could not. It could just be the regular double top. All right, y'all got any other questions? Let's see, what is the name of the indicator that gives you the triangle circle at the highest level? That's called a fractal, Tamika. I actually helped you set those up on video 1 of the training. Get with me on Facebook and I'll send you the links for all of them. It's about 9-10 videos so far. And it's going to take you about at least, shoot, keep it all real with you, man. It's going to take you at least, I'm going to say 13 to 17 hours to complete.
Jeez.
Yeah, it's a lot of material, man, that I'm pretty much releasing for you guys. But is you chef going up right now? Yep.
What's up, bro?
Yeah, you chef, like, so if this has already happened pre-news, then news should just pretty much further push it up, give its momentum. But that's pretty much what we're looking at, guys. All right. Well, that's pretty much it for today. Like I said, next week we'll probably resume the training courses and things like that. But I'm gonna start doing these little hangouts probably around like London session again. That way you all can get some chart time with me. Sometimes I'll have my brother on here, Dwayne will be on here sometimes. It won't always just be me, don't get me wrong. So that way I can expose you all to different trade styles. But yeah, so my advice for you guys for this week, finishing out and things like that, try to figure out what type of trader you are. Are you a scalper? Do you intraday trade, or are you gonna be a swing trader? Try to figure that out, and then because that's going to also help you understand what charts you really want to focus on. Also going to help you as far as when you want to enter your trades and things like that. Like this is all imperative to your all success. So just be figuring that stuff out. You know what I mean? Y'all got any questions for me?
Well, everything's good, brother. You did a good job, man, as always, man. Thanks,
Appreciate
man.
it, man. Appreciate it. All right, guys. Well, Tamika, like I said, get with me. No problem. Get with me on Facebook, Tamika, so that way I can get you the links for the training material and stuff like that. It's my first time going through it. I'm actually polishing it up myself. I'm putting it together like a book, right? So that way I can send it to people and things like that. So it's pretty dope.